Hello traders and welcome back to another video. I hope you have a positive and profitable week. How to maintain a positive trading psychology. Your psychological state can have a massive impact on your trading decisions. Start off the morning by looking at yourself in the mirror and saying, I'm good enough, I'm smart enough, I am the best trader. With enthusiasm. It helps you get in the right mindset and helps you to start your day thinking positive thoughts. Surround yourself with a positive environment. This can be your workspace or the people around you. The world is filled with doubters and people who want to help you by destroying your dreams or shooting you out of the sky. Make it easier on you by surrounding yourself with other positive thinkers who reassure and support your forex trading. Let's jump into the chart. The currency pair is British pound versus US dollar. 4-hour time frame. The setups that I am going to break down are shared on Premium channel. The bullish structure that is present here is highly discernible. The demonstration of the higher high and higher low are clearly displayed, with a grey circle serving as a visual emphasis. As an experienced trader, I aim to occasionally incorporate chart pattern analysis into my established trading methodology. As we can see, we have a rising wedge pattern, a very common pattern in the market, and you can find it almost any time. Price broke out and dropped more than 400 pips in downside direction. Trading with chart pattern is very good in the beginning of your trading journey because they are identified very easy. Let's do the same procedure as always. Price broke the last lower high, the first indicator of potential change in trend. This is the market formation that we trade most of the times, and it have a positive winning rate. This is why we continue doing that. Find what's worked for you, don't forget that. We are highlighting the imbalance zone that was filled from the market. According to chart pattern's point of view, we have here a parallel channel, price breakout, and retested, and reached the target according to this pattern. Of course, the fundamentals play a big role to this bullish move. But personally, I rely mostly on the technical aspect. They reflect fundamentals most of the time. We are highlighting the daily session volume profile indicator. And as we can see, price bounced in upside direction right after it tapped to the fresh point of control zone. This is not a coincidence. The market is driven from supply and demand forces. We have a fresh point of control located almost on recent higher high. This zone right here was a potential reversal one. Price also is moving in a corrective way, so we can project a parallel channel similar with the previous one. Price rejected the zone with an engulfing candlestick pattern. In this moment, we can place a pending sell position at 50% of the candle body. We can target the liquidity level below. And of course, we must put the stop loss above the last higher high. If price make a fake out in upside direction, we are going to consider a second entry. This is just an assumption. Price pull back and continue to consolidate on this area. Let's forget for a moment the sell trade. Market can offer short-term opportunity, so better to take advantage of it. Even though our long-term setup was a sell, I spotted a short-term buy opportunity. We had a fresh demand zone and a liquidity level above it. A perfect combo for a high probability buy trade. Another confluence for this trade was the trend itself. As we can see, it is still bullish. On 15-minute time frame, we refined the demand zone and spotted another demand on the edge of the major one. The buy order triggered perfectly. Price also give another opportunity to enter at retest of the new order block that was just created. Personally, closed the trade at 1 to 2 risk reward. Let's shift to our major setup shared in the beginning of the video. We had here a textbook Wyckoff distribution schematic. All supply and demand traders use the principles from the Great Wyckoff. Both the illustration image and the current price align perfectly. So, this was another sign to hold the trade and not close it, even though there is nothing wrong to close the trade if the market changes the bias. Price made the last pullback and dropped in downside direction sharply due to the economic news on US dollar. In a nutshell, if we simplify everything and shift on daily time frame, we have a double top pattern. Price touched a daily order block, and we expect a small bounce from this level. The major demand and the stronger one is located below it. So, if price touches it in the future, we're going to look for buy trades, of course on the lower time frame. I use daily time frame for general bias of the market. Thank you for watching our video. We hope you found it informative and helpful. If you have any questions, please leave them in the comment section below. Don't forget to like and subscribe. Thank you again for tuning in, and we'll see you in our next video.